All right, welcome to the weekly prep video for the week of August 4th to the 8th. In this video, we'll be taking a look at the action over the last week of the indexes, liquid leaders, industry ETFs, and some key earnings reports. We'll then end the video with the long and short setups that I'll be watching for going into next week. So you guys enjoyed the market analysis in this video and want my thoughts throughout the trading day, you can sign up for the Discord using the link below. All right, jumping into it, starting with the NASDAQ, down 2.2% this week, down just about 2% on Friday. We had that awesome gap up on Thursday with Meta, Microsoft, and Roblox earnings. Unfortunately, institutions used that liquidity to sell into. We saw distribution throughout the day on Thursday. On Friday, we got job numbers revised down. That definitely spooked the market. We gapped below the 20-day EMA, had a mini bounce kind of intraday, but then sold off at the end of the day and closed near the low. We are closing right into this support gap, so hopefully that holds. But one thing that I always say is trends don't change until you get a unfilled gap in the opposite direction. You can study past leaders, past market cycles, and you'll know this to be true. But just looking at the most recent kind of sell-off that we eventually flushed at a support gap, rallied up, but this wasn't really a tradable bottom until we put in a higher low and then had a gap up in that direction. So instead of the downtrend that we were in, we got an unfilled gap up and then we started basically stacking those until we got the uptrend. This is the first unfilled gap down that we've had in quite a while, and the first that I don't think is going to get filled right away. We had a couple in here, minor gap downs that got filled relatively quickly, and then we were back into the uptrend. But because we had a news failure on good news with Meta, Microsoft, where this was good news, we had a gap up. We should have continued if the demand was still in the market. Instead, they used that liquidity to sell into, and then we got a gap down. My thoughts are below the 20-day moving average, and after this sustained run that we were on, it's time to play some defense and not try to push our luck here. S&P 500, similar type of weakness, gapped, opened at the 20-day EMA, flushed to the support gap, and closed right around there on larger volume. That was down 2.4% last week and 1.6% on Friday. The growth stocks of the Russell 2000, which is IWO, gave us our warning sign on Friday. There was two gap zones that we were watching: the support gap to the downside, resistance gap to the upside. And we said whichever way that we get a close above those, either above the resistance gap or below the support gap, chances are that's where the trend was going to take us. We had a quick uppercut and fail of the resistance gap earlier in the week, and then we closed below it on Thursday. Followed it with a gap down on Friday, where we bounced at the 200-day moving average and the support gap. We did close above the 50-day, but to me, this is now a downtrend. That finished down 3.2% last week and 2% on Friday. ARKK down 5.7% on Friday and 7.3% for the week. We started to see some weakness overall in the name where we had this resistance gap already, tried to get through it on Thursday's gap up, immediately reversed and closed near the low. And then on Friday, big gap down. I believe they're pretty heavy in Roku as well, which had a gap down on earnings. Bounced at this very slight support gap, but overall, to me, this is now in a downtrend. Eventually, if it comes into the 50-day moving average and starts to build out another base there, that would be something that I'd be looking for. But I don't want to be just rushing back into the market when the two kind of indicators that I use, two of the indicators that I use is the IWO and ARKK to signal risk on or risk off. Once they're below their 20-day moving average, trading on the long side for me gets extremely difficult. I could look through my trading stats and I see that. And we're below the 20-day moving average on both of those. So I know that trading is going to be difficult on the long side for me. Definitely don't want to be taking any breakouts. Look for more undercut and rallies for entries if you want to trade on the long side. But to me, we've had such a great run recently. We've kind of we definitely got extended. People sold off that good news, and now we're risk off. And then IBIT, taking a look at Bitcoin, we had a nice flag into the 20-day moving average, but that reversal on Thursday and flush on Friday, not good overall. Eventually, we can come back into this breakout retest in the 50-day moving average, and we'll see if buyers step in at that point. Taking a look at the liquid leaders, I did have to make some changes over the weekend. I took down three different stocks. I took off Coinbase, which we'll go through that. Whoops, not Cole. Coinbase. Gap down on earnings, finished the day down 16.7% under the 50-day moving average. Extremely ugly action. So I took that off the list. SMR, I took off the list, gap down below the 20-day EMA. Did rally to close like higher in that range. I don't think this is completely broken as a chart overall, but this is a large gap down zone that even if we rally back into it, chances are we'll need a lot of consolidation before any higher. And then the third one I'm kind of blanking on right now, but added Dash. Dash has this nice support gap at the 20-day EMA, also has earnings coming up. We do have a slight gap down on Friday, but you can see awesome action of accumulation on Friday. We undercut the support gap, got to the 20-day moving average, and then bounced from there. Earnings is on the 6th there after the market close, so we'll keep an eye on that. GEV also great action on Friday. The two themes that held up the best were semiconductors and energy. We'll kind of cover that with the ETF walkthrough. But GEV, incredible relative strength, bounced at the support gap, closed slightly red on the day, down 0.7%, but still above the 5-day moving average. That's just incredible action given what we saw with the rest of the market. Robinhood, tons of volatility. This was down like 8.9% or maybe even like 9% at one point on Friday, then rallied all the way back in the middle of the day to go green and just to eventually settle right at that 20-day moving average and that support gap. We bounced off the high volume close from earnings day. So that's kind of a line in the sand that I'll be watching for to see if we can hold at that area. But to me, Robinhood has been the market leader for this uptrend. And the fact that we're getting all this volatility. We didn't get a break higher on earnings, and now we're right at the 20-day moving average. Just shows you that the market environment is likely going to be much tougher going forward. I added MP to the list as well. This is an energy name that has been acting incredible lately. Great relative strength on Friday, higher highs, higher lows, closed over the 5-day moving average, ending the day up 3.6%, while the indexes were down heavily. So great relative strength overall. We'll keep an eye on that one. NVIDIA, gap down, lower highs, lower lows. We did bounce before the 20-day moving average and closed right at the 10-day basically. We'll see how we respond if we can get like another move lower. But overall, we had that gap up on Thursday, followed it with a gap down on Friday. So I think we're just going to see more volatility in the market. Palantir has earnings next week, so I kind of attribute that to the relative strength that we saw being down only 2.6% on Friday. Closed just below the 10-day moving average, bounced at the 20-day. Overall, the structure of this chart is still fine. Roblox, I kept it on the leaders list for now, but this is obviously like very disgusting action. We had a 20% gap up on earnings, which, I mean, this stock had a 200% move off the low, off that 200-day moving average, off the support gap here, without even testing the 20-day EMA once. Monster stock, monster action. But when you get that type of move, and we saw that previous acceleration for a couple days and then volatility pick up, and then you add a 20% gap up, that was a sell signal. You got to sell into strength at that point. We saw distribution the rest of the day on Friday, then a gap down in distribution the rest of the day on Friday. Sorry, Thursday distribution, Friday distribution as well. Closed below the 5-day moving average, still above the 10-day, but to me, this will need time to really consolidate and construct a new base before it goes higher. I also added Reddit to the list, RDDT. This had incredible action the day before earnings, up, what was this, 7.8%. Followed through on earnings, up another 16.8%. You can see previous little gap zone down that we closed below. The sooner we can get above that, the better. But overall, you can see this was a name that kept kind of wicking under the 20-day moving average, so shaking out a lot of people. But every day we closed above the support gap, showing that institutions were soaking up these shares by the end of the day. They wanted the stock at this price. And now it makes sense why, because we had two gap ups and basically a move from 145 to 188. Great action overall. We'll see if that can flag out and give us an entry as the market pulls back and then starts to consolidate. And finally, RKLB, Rocket Lab. Overall, great action. A little oops reversal, gapping under the 20-day moving average, recapturing it. It did actually go green at one point on Friday, but then reversed and closed a little bit lower, down 2.4%. So overall, this just looks like a quality kind of pullback into the 20-day moving average and flag. I wouldn't want to see like a significant move below today's low. A quick undercut and reclaim could actually be a buy point, but it does have earnings on the 7th. So for me, given the market and earnings are too close, not quite something that I'll be tracking. But overall, good action. Jumping into the industry ETFs, we'll just let's filter this by the price percent change last week and then go through what we saw there. All right. So first we have ITB. Um, as you can see, every single industry ETF was down last week, which is not a good sign for the overall market. ITB home builders. This was the strongest of the bunch. Good action overall, because of how weak the job market was on Friday. With those numbers revised down, chances of an interest rate decrease or chances that the interest rates, the federal interest rates drop increased. So because of that, home builders had a nice jump on Friday. Overall, this kind of looks like a bottoming base, very, very closely tied to interest rates. But you can see the blue candles here on massive volume shows accumulation and kind of shows that the market is starting to think that interest rates are going to drop here shortly. Like I said earlier, semiconductors was the other group that showed any relative strength along with energy on Friday, down 1.7% on Friday, down 1.2 for the week. Did close under the 20-day EMA, so not great action overall. But you can see we didn't close at the low of the day. We kind of closed mid-range. The sooner that we can get back over the 20-day moving average, the better. And I definitely don't want to see a break below today's low or Friday's low. ITA, this is the defense and aerospace ETF. This has been a leading theme this entire move up. Starting to see some volatility. We had a break of the 10-day moving average a couple weeks ago, rallied back into highs, and now we've broken back below. Still great relative strength on the day on Friday, down only 0.4%, ending the week down 1.25. Still over the 20-day moving average and the support gap here, so we'll see how that builds out. XLP, this is consumer staples. I barely pay attention to this. Overall, just a choppy mess. XLE, the energy ETF, some big weakness, potentially signaling a upcoming recession. This has been relatively weak the entire move off the bottom, and now that we're seeing job market kind of tighten up, not a good sign overall. If we break below the 50-day moving average in the support gap, this could just be the consolidation and like a lower high before we break down further. IYZ down 1.8% last week. This is telecommunications ETF, lost the 20-day moving average, still above the 50-day. XBI biotech ETF, another theme that actually works well with lower interest rates. So a little undercut and reclaim of the support gap. Still closed under the 20-day moving average on Friday, but actually finished green, up 0.3%. As long as this holds the 50-day moving average, this could just be a higher low. We rally back into the 200-day, consolidate. Really, like I won't be super interested in this theme until it breaks over the 200-day moving average at 88.50. Robotics ETF, kind of hammer candle at the 20-day EMA. Obviously, would rather us not break lower, but we'll see what happens there. Gold miners, GDX, gold gold in general had some relative strength last week, which was good to see. Holding the 50-day moving average on a closing basis on Friday after two closes below. Overall, I just think this is a little choppy, and we saw money rotate out of some of the risk on stuff into some more defensive themes. So we'll see if that trend continues. FDT, disgusting action. Not much more to say here. We gapped up on Meta's earnings, which was awesome on Thursday, but sold off throughout the day, then gapped down and lost the 20-day in one day. which is ugly on massive, massive volume, not the action that you want to see, and obviously a trend changer here as we lose the 20-day. XOP, this is the oil and gas exploration ETF, very similar to XLE. You can see we lost the 50-day already. We're starting to accelerate down. That's not a good signal for the overall economy. PEJ, gap down, loses the 20-day EMA. This is leisure and entertainment. This trend has now changed into a downtrend. IGV, software ETF, we gap down and lose the 10 and the 20-day EMA in one go on big volume. This also signals a change in the intermediate trend to a downtrend. XLF, financials ETF. I had hoped that this was going to be the next kind of theme to break out of what looked like a quality base here. We made new highs, and what you don't want to see after you make new highs is immediate reversal, and that's what we got last week. We made new highs, then immediately reversed, lost the 5-day, then lost the 10-day, lost the 20-day, gap down and lost the 50-day, all in a week. Gross, gross action, not what you want to see. XLV actually up 0.5% last week. Healthcare has been just a beaten down group overall. So lower rates kind of helping with biotech as like a section of this, but overall not a theme that I'll be focusing on. XLY, consumer discretionary ETF. Apple is very heavily weighted in this, and you can see gap down, and we lost the 50-day on Friday. Not good action overall. Cybersecurity, this was another theme that I was really focused on as a potential group to get rotation if the uptrend was going to continue. I bought CrowdStrike on Thursday, and I got stopped out of CrowdStrike on Thursday for a 0.8% loss. And now it makes sense why we gapped up into that resistance gap, sold off throughout the rest of the day, lost the 50-day, lost the previous low, and then we gapped down and started to accelerate the move down on Friday, ending the week down 4.2%. XRT retail ETF, another theme that I had some hope for, but very quickly we lose the 5, the 10, the 20, and the 50-day moving average. We did bounce at the support gap, but overall, the structure wise of this chart is now in a downtrend, and I don't want to fight that. KWeb, if you've been following these videos, I thought that this was going to be the next theme to really pick up. And it looked like I was right for a while, and then it rolled back over. Overall, this is just a breakout retest. So, like, this could be just another lower high in the base. And if money rotates like out of the US into other countries, maybe this is the shakeout low before another move higher. But I got stopped out of a lot of my Chinese equities on Thursday and Friday. So we'll see how that responds. XLB, a little bit of weakness on Friday with a gap down under the 200-day moving average. Well, we lost the 200-day on Thursday, excuse me, and then gap down further on Friday. TAN solar ETF, not good action, losing the 20-day on Wednesday. And usually, like this theme really does well with lower rates. Even with that, it had more distribution, so not good action overall here. I'm repeating myself so often because I'm just being objective going through this list and showing that, hey, the market has changed, like the character of the market has changed. We're seeing so many themes starting to break down, and we really want to pound that home that the theme or the character has changed in this market. IYT transportation ETF also loses the 200-day and the 50-day moving average in one go. Not a good sign. XME, some good relative strength as money rotated into gold. This is the metals and minings ETF, but still below the 20-day moving average, so not ideal. NLR, nuclear and uranium theme, good closing basis, like we saw with some of the energy names, um, like AI energy, but overall still under the 20-day with a gap down, so not great. And then blockchain ETF loses the 20-day moving average. Coin and Hood are our two major stocks in this ETF, both pretty ugly days on Friday, and then Bitcoin rolling over, not good action. Really needs to hold this like support gap, 50-day moving average. If we undercut it a little bit, that's fine. But overall, like this is at a do or die spot, and things are not looking good. So I kind of alluded to a couple of the key earnings earlier in the week. We'll start with Meta. Had a great gap up, about I think it was a 10% move off the 50-day moving average into new highs, and they just sold that down. Gap down on Friday, still above all the key moving averages. And overall, I think that this chart could be one of the leaders once we do go through a consolidation and a little correction. I'm just not going to be jumping on it right away on like any small pullback. Earnings season kind of kicked off. The warning signal for me was SoFi, which had been on the leaders list for a while. We had a massive gap up on earnings, was up about 18% at one point, and then sold off the rest of the day, did an offering, gap down, bounced at the 20-day, but you can see like this type of volatility is not what happens in a healthy uptrend. So when you see this out of one of the stocks that was like a growth leader in the market after good after a good initial response on earnings, it's a sign to just step back and start to play more defense. Microsoft, whoops. Microsoft, another name that had a huge gap up on Thursday, sold off, tried to gap up again while the market gapped down, which was a good sign of relative strength at the start of the day. But overall, the market was just too weak. People were leaving, taking risk off the table, and we saw distribution the rest of the day on Friday. I can adjust this. Whoops. I can adjust this gap zone down to the close on Friday. We'll see how that happens. And then we covered Roblox already. Apple was the other name that I was really watching on Thursday. This has been a laggard the entire upcycle of this market. We rally into this resistance gap, and we actually gapped up to start the day on earnings, and then just ugly action the rest of the day, losing the 50-day moving average on massive volume. And now this like really looks to be in some major danger here. And if like we had such a great rally without Apple, but now that Apple's like actively starting to break down, I think that's going to put a lot of pressure on the market. So that being said, here are some long setups that I'll be watching for, but I am not super excited about anything on the long side. I think we're going to need a lot of time to actually like pull back, consolidate, shake people out. Because of the method or the way that we rallied off the lows, basically a lockout rally from the lows. There's going to be dip buyers along the way here, but after the action that we got Thursday and Friday, the first couple of dips that get bought, you're likely to see lower highs get put into structures and then rallied into resistance gaps, rally into overhead key moving averages. And that's just going to be another opportunity for institutions to take some money off the table and to de-risk. So until we see the indexes back over like the 20-day moving average, over those gap down zones, and we see a new crop of leaders like start to take off, I'm not very confident with anything on the long side. But just like we went the entire upcycle with a short watch list as well, I like to keep both long and short watch lists just to kind of keep track of what's working in the market and get that market feedback. Just because I'm going over some of these long and short setups doesn't mean that I'm going to take every single one of them, but every single one I have alerts on, and the action of the market is going to give me feedback based on those setups. So GEV is the first one. You'll notice tons of semiconductors, tons of energy names in this list overall. But GEV has been like the liquid leader in energy in my mind, trades the smoothest. Great action on Friday off that support gap. We'll see if we can just get another pullback into a lower gap zone around 622. That would undercut the 10-day moving average as well and kind of shake out some more people. So we can get a lower risk entry point there. But again, we're like so far extended here. Usually, after the market breaks down and you have your first break, any relative strength that you track tends to be the next group that gets hit on the downside. So unless this is just like a 1 day shakeout and things like magically repair, I kind of don't see that happening. My guess is that this is relative strength that's going to turn into some relative weakness later. But set your alerts at that gap zone below the 10-day. You can still play it for like a 1 or 2% stop, and then if you do get stopped out, there's your market feedback. BE, Bloom Energy, incredible action on Friday. Huge gap down, got into the HVC, the high volume close, and the support gap. And then just right off the jump, you could go to a 1 minute chart right off the jump. People stepped in and supported the action. And whenever you see stuff like this where ugly news or ugly initial response gets soaked up, that's a sign that the stock's being accumulated. And usually institutions don't just accumulate like that for one day. They continue to build positions. But given the market pressure, I think those two things are going to be working against each other. But that's actually probably going to give us more like tighter price action overall into a pullback that we can eventually find positioning in. So while there's not a clean setup at this point right now, I'll be watching for like another pullback into that 10-day moving average, into that support gap. Maybe at that point, we'll have the 20-day moving average catching up. But overall, this is just a stock that I think you have to have on your watch list and focus list. I just don't think it's actionable like at this point. NVIDIA, this 20-day moving average, I want to see an undercut of that and kind of pull back into the support gap area here, kind of where we found support last time. I don't want to be the first one to buy this. I want to see it kind of a shakeout before that happens. So watching these gap zones around like 165 as a pullback for NVIDIA. VRT, we had an awesome response of the support gap 50-day moving average shakeout on June 10th, rallied up into like not quite new highs, but right at new highs. And then good accumulation after the gap down on Friday. But overall, I think the market is just too weak to buy anything on strength. I'll be watching for a pullback into the gap zone at 131.80 and that 20-day moving average for VRT. Sharknin, Shark Ninja. One of the like retail names that I have actually like a ton of their products. I love the company overall. I love their customer service. When something broke, I called them up. They sent me a new coffee maker right away. So really love their product, but we need to pair that with quality price action if we're gonna buy the stock. And overall, we've had quality price action. We rallied up into new highs, pulled back, gap down below the 20-day moving average, but you can see we wicked off the support gap here. This does have earnings on the 7th before the market, so probably one that I'll just be using as kind of like a tester to see if we break lower or if we can rally up into this previous gap. Um, After earnings, if we get like a little shakeout of this 110 zone, that's the spot that I would be watching for. So we'll see what goes on. CRDO, another semiconductor name, kind of like VRT. We've got that gap down, but we have a close higher than the opening price, so showing some accumulation after that support gap test. We'll look for an undercut of the 20-day and support gap at 101.80 as a potential buy point. NBIS, some good relative strength, also has earnings on the 7th before the market opens. So, not likely one that I'll actually take as a trade, but a pullback higher low into that 20-day moving average would be a potential buy spot versus the low of the day on Friday. But again, just like a test setup for me to watch. Then PSIX, this was on the watch list going into Thursday. We got that nice downtrend line break. Unfortunately, we got the gap down on Friday. Overall, like good relative strength with the close up in the daily range, back over the 20-day moving average and support gap. So we'll see if we can continue to trend lower, put in a overall like higher low. So like the 20-day moving average would come up into the support gap zone. We would undercut the support gap zone low, but still maintain over today or Friday's low. And then my stop would be at Friday's low on this. So slim pickings on the long side. On the short side, we got some quality setups. But given the fact that we had such a reversal Thursday, Friday, a lot of these names are more like speculative names that I would not be taking with a ton of position sizing, but think that now that we're seeing momentum really dry up in the market, a lot of these names that have made massive 100% moves are you're going to start to see fall apart quickly. SUPX, this name went from $10 up to $28 in 2 days. We have two gap downs since. I'm just looking for an uppercut and fail at $22 as a potential entry, and then my stop would be the other gap zone at $24 or 23.25. Because it's so wide that stop, I would obviously be position sizing a lot lower on that name. NNNN, this is one that I have a short position in already, looking to add to it through today's low. Name that's moved from $7 up to $52. We put in a lower high. We got the resistance gap, uppercut and fail. Now we're at the 20-day moving average. If this loses this little 3-day kind of shelf of lows, it can really accelerate to the downside. So, of all the names, this is probably one that I'm more confident on and would try to add to my short position. NEGG, this has been kind of a nightmare to try to short. I get good positions and then I get stopped out. And obviously, like hindsight, this should have been like a nice long. And we kind of covered it as I put it on the short watch list, but we covered it in the video as a potential long through this pivot at 32.50, and it stopped me out at 32.50 because we took that pivot out and my short got stopped out. We accelerated, basically doubled from that point. So thank God for shorts. That's why you should always have, or sorry, thank God for stops. That's why you should always have stop losses. But now with momentum leaving the market, we put in this high, tried to rally and actually went green at one point on Friday, but then closed lower. The only way that I would add to this short position is if, or uh, start a short position is on a gap down and then like an opening range break, look to just continue to add to the short position because this went from $3.50 up to $70. Really reminds me of this stock QMCO, where this was like a fake quantum name that went from $3 up to $90 and then has spent much of the rest of the year dropping back down to $4. So with momentum leaving the market and a name that's extended but hasn't broken down yet, we'll keep an eye on a move through today's low, Friday's low at 49.50. MIMI, this is one of those Chinese or international scam stocks where the entire float gets soaked up on one day. Whoever's manipulating the stock just wash sales it back to them. You see these massive lower wicks because there's actually no demand for the stock. No one's actually buying the stock, and eventually it gets wedged up. The people that are manipulating the stock, they leave and it crashes 80 to 90% in a day. We've seen this with OST accumulation on one day, wedges up, makes a massive move on the upside, but then in one day, like immediately halts down 93%. We saw it with PCLA. That was one that I actually took on the short side, moved from $3 down to 42 cents. That was what, 76% down in one day. TTHL was another recent example of that, where we made a move from $2 up to $30, and then in one day, just down 94%. So MIMI, that's going to be one of the ones that next gets hit with an 80% down day. Another one that is not a Chinese company, but kind of is acting the same way is CVM, where in one day we had tons of volume here, and now we've just rallied up on basically no volume. It's not quite ready in my eyes. This is still trading structurally fine, which you tend to see the volatility pick up before that major drop. So I don't think it's ready just yet, but it's a name like those others that I'll be watching for as a potential short. CEP, this has been on the short watch list for basically the entire time that I've been doing this show. Lower high, a name that very similar to QMCO went from 10 up to 60 dollars in a short period of time. We had this flag that broke down with a gap down. That's key when you have these kind of consolidations that look like it could go higher, and then you actually get a gap down to break that structure. Usually the stock is toast at that point, and it was dropped from 44 to 25, rallied up, put in another lower high, kind of a little wedge into the moving averages last week, and then started to roll over in a big way on Friday, down 8%. This, if we get a little gap up and then a loss of the VWAP, that would be a short entry. But this is just sitting on a shelf at this point. Once that shelf breaks, you're going to see pretty quick acceleration to the downside. And then two kind of longer term ideas, SFM and MMYT. We've covered this on the show before, whatever you want to call it, the videos before. Massive moves. This is Sprouts Farmers Market, grocery store that I go to. Great grocery store overall, and it proved to be that because it went from $30 or $25 all the way up to $170, and one of the cleanest uptrends I've ever seen. And just because it was a low ADR name, a lot of people ignored it, myself included, but it was a monster stock. After that move, we've now put in a stage three top. And with the earnings last week, it looks like we're starting our stage four decline. We've seen a false breakout earlier in the year, in June, followed by lower high, loss of the key moving averages, down to the 50-day move, or down to the 200-day. And now I think this is just going to be a break of structure, and we're going to see like a long unwind of this. For positioning, I would look for an uppercut and fail of 158 at this gap zone. That would be the 10-day moving average as well as a lower high overall, or a loss of the 200-day moving average at 151. MMYT, kind of a similar story price wise. Massive move from $23 up to 125, basically a 5x. Then put in a very ugly stage three top. Started to stack these resistance gaps, showing that people were selling these pops, and every time we rallied into it. Now we've got the 200-day moving average above us. Most recently put in another lower high in the structure at the 200-day moving average. And with earnings, just started to accelerate to the downside, losing the key moving averages here. So with this, I would love to see like another little rally into the 5-day, right around 95 to short. But I think you kind of like, because it's a slower mover overall, I think you kind of like slowly build into a short position on this name. But overall, like it doesn't move super fast. So if that's not your speed, that's fine. But structurally, I think SFM and MMYT are two stocks that have had major uptrends, have had major stage three tops, and are just now entering their stage four declines. So that's going to be the weekend prep video for the week of August 4th to the 8th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my daily market thoughts throughout the trading day, you can sign up for the Discord using the link below. Hope you guys have a great rest of your week, and I'll see you guys on Monday.